What is the market telling me this week? Welcome to the Nick Rutherford Report. And some people like to call me the angry investor because I get pretty angry at all the crazy stuff that's going on. And what we're going to do here is try to look through the chaos and let the market tell me what to do. And that way, I'm not going to lose a lot of money. I'm going to lose a little bit of money and make a lot of money. That is really the point. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it, because this is the place to be for the financial news that matters for your net worth. We're going to look at the market and find out what could be a great super investment, because the market is telling me something. And if I was not living in the US right now, I would be paying highly close attention. We're going to get to that because, well, there's some crazy stimulus going on. Let's get to it. Q2 GDP on September 26 was just released, and it is scorching hot, 3%. And the reason I say that's scorching hot is because everyone on the internet has been saying, oh no, we're going to tip into a recession. And you know what? There is no sign of a recession if GDP is up to 3%. It's just not going to happen. And even if magically is there a recession happening, which I've been of the opinion that there's two different economies, the digital economy, the economy that's growing, and the economy for the rich people, and the economy for the lower and middle class people who have been getting killed by inflation. Well, the economy of the rich people is surging. 3% surging because, well, if it says that way, the algorithms are going to read it and they're going to bid up stock prices. There's not really more that I need to know. And if I want to find great super investments, I'm going to be watching the market to tell me exactly what to do. And this is wildly interesting because, as you know, Wall Street wants to take advantage of you. And you know what? We need to watch the market so we can take advantage of it. University Michigan Consumer Sentiment Survey confuses in September. I don't know what's confusing about inflation. Inflation has been high, prices have been going up, and middle and lower income consumers have been getting hammered. So, of course, their sentiment is going to be bad. It's obvious. This is not confusing at all. And let's continue on some of the most interesting macroeconomic news for this week. The invites are out. Tesla's October 10th Robotaxi event is a go. Why is this such a big news that I'm covering here? Well, I'm not so concerned or hyper-focused on Tesla stock. But what this does tell me is that the AI trend is intact. And if they get robo-taxis right, you know what? They're going to be getting humanoids right pretty soon. And the whole economy is going to change over the next 2, 3, 5, 10 years. It's going to be radical change. And there's going to be huge opportunities to find amazing super investments for anyone who's watching the market. So let us continue. The Fed's favorite inflation indicator is the hottest since April. Government handouts continue. Yeah, it's the hottest. It's soaring. Well, let's look at the graph. I say this almost sarcastically. Well, yeah, you know what? It ticked up a tiny little bit. Unless oil's at 120 or heading to 120, I'm not really worried about inflation. Until I have signs of that, well, this type of article is just designed to scare you so that Wall Street can take your money. You know what? Pending home sales limp off to all-time record lows in August. You know what? Maybe the economy will slow down, or at least segments of it. So if you're invested in home builders or Home Depot or a company that's supplying things to the home market or mortgages or banking, maybe that's going to slow down. But you know what? AI is growing. There's more and more chips. Micron reported earnings 2 days ago, No, 2 days ago on the 25th. And they had blowout earnings. We're going to talk about that shortly. And that's why I want to look at the data to see what happens next and what I'm doing about it. Because I'm watching the market so that I can find super investments that are going to build my wealth a lot faster than just a regular investment. Now, initial claims in the data, here we go, let's look at the data, drop back to near multi-decade lows. So if the initial claims are not going up, how are we going to have a recession? If GDP is cranking, how are we going to have a recession? Well, you know what? I say there's no recession today, and there's no recession next week. A few weeks later, if all of the data gets really bad, well, maybe we could have a recession. But until then, I am long, and I'm long the trends that are making me money. What kind of trends are those? Well, AI. Advanced AI system is already self-aware, according to the AIS Alliance founder. Now, I'm pointing this out only because it's a signal. It's a signal to me that the trend is still intact. Guess what? We're building more AI. AI is getting better. All of the companies taking advantage of AI that have real earnings or continuing to make more and more money, it's intact. Guess what? There's going to be more AI soon, and that means that companies that benefit that could become super investments. What they are, well, you're going to have to go to my website and join my Super Investor Pro membership if you want to know exactly what I'm investing in. But I'm always investing in trends, and I want to be in early so I can profit from them. Don't just want to chase things. And here's a trend that I want to point out for anyone who's interested in seeing something, because the market is telling you something and the bottom is in. China goes all out as I forget how to say his name. I misspoke there. Vows fiscal stimulus to save the private economy. I think it's Xi. He wants to stabilize the real estate, boost the stock markets, and boy, he is not messing around, because when he says something like this, the world famous investor David Tepper says, buy everything China. He was on CNBC saying that because this is huge financial news. Why is it huge financial news? Because they're doing so much stimulus, the economy's going to go up. And you know what? Look at the iShares Large Cap China Index. It's up 21% in the last month. In the last few, the news here came out right here on September 24th, 25th, 26th, maybe yesterday, I think it came out, but it's on a tear, and it's up 17% in the last 5 days. And if you look at this over the last, let's say, 5 years, you can see that we really came down. The whole Chinese economy really contracted. It bottomed out across a year and a half, and now they're promising stimulus. This reminds me of when the government promised lots of stimulus during the plague, and everything went bananas. So, if you're interested in a bottom, well, the market is telling me there's a bottom in China. Of course, there's huge risks to investing in China because we could have tariffs, we could have election and a new president, and there could be more tariffs, there could be trade problems. So it is not without its risk. So personally, I'm not investing in China here. I wasn't investing in China last month. It was very obvious that it was bottoming when Alibaba kept bouncing off 70. I almost bought into it, but I didn't, because to me, there's a whole wild card of the tariffs, and when the government could potentially freeze your ADRs like they did with the Russian ADRs, you know what? You have to ask yourself, is the risk worth the reward? Well, if you're buying at if Alibaba at 69, let's pull up Alibaba real quick. If you're buying Alibaba here, let me make sure everyone can see the chart. If you were buying Alibaba at 63 or at 70, you know what? Maybe the risk reward would be worth it. And I was seriously considering it. I was even talking about it inside my Super Investor Pro membership. And the reason I would have been considering it at 69 or 70 or 63, because let's say you buy it at 65, well, it doubles the all-time high was $299, so that leaves you with 3 or 4 doubles. So 60 at 70, it could go up to 140, and then that would be a double, and then another 2 doubles to 280, back to an all-time high. So losing 50% of your money or going to 0 or getting 4 is much more attractive than when it's already near 110, and maybe that's only a 2 or 3 times. So something to consider, but the government in China is clearly telling us stimulus on, the bottom is in. And David Tepper, one of the world's best hedge fund managers, I think he averaged 24% a year for many, many years, 20 years straight, something like that. I don't remember his record off the top of my head. He's been scooping up those stocks for those ADRs like JD and Alibaba for over a year, and now he's saying he's buying like crazy. He says his quote was, buy everything, if you watch the movie, if you watch the report that he did on YouTube when he's on CNBC. So that's something interesting. It's something I'm watching. It's a huge, huge market signal. I don't usually come on here and say there's a market signal, but boy, is there a market signal. So if I was not living in the US and I wasn't worried about my ADRs getting frozen, I would be scooping this up left and right. If I could stomach the risk of that potentially happening, or not stomach the risk of my ADRs getting frozen like the Russian ADRs, well, then I would consider it. I may even consider it for 4 or 8% of my portfolio, but you know what? Personally, I looked at it and the risk of it going to zero was a little too high for me to really jump in, and then I felt like I missed the bottom. But we're still very, very early, and we could have a very long way to go up, because if you look at it, like Alibaba is way back to 2016 levels. So if you're willing to take the risk, and I don't think there's a lot of risk, it could be a very good swing trade. I'm not recommending you do it because something could happen and they could freeze the ADRs. But there's not going to be a big political shift until November. So I do think that the risk is minimal from October to November. But if the administration changes within this election in the U.S., well, there could be a lot more risk than's priced in. But you got to remember, everybody else knows this, so you're trading off what everyone else knows. And now they know that the bottom is in, so they're acting accordingly. So you really have to ask yourself, is Tepper buying everything, or is he saying that so he can get exit liquidity? I'm not sure. I'm not in the trade, but if you're a swing trader, it's something to pay attention to. If you don't worry about the China risk, it's something to pay attention to, because the global markets soar. Gold hits record high after China vows fiscal policy bonanza. They really are. So they can also pump the economy from the Chinese side. There are lots of people who said, well, the economy got pumped after the great financial crisis through China taking on this debt. You know what? They can take on more and more debt. Anyone who keeps saying the debt matters, well, you know what? I don't think that they study history. They just want to be a doom and gloomer, because the debt really hasn't mattered for Japan. We've got 40 years of Japan getting more and more debt and buying everything under the sun. So call me when the debt really matters, but people who have been saying that they have been losing money for the last 40 years, well, everyone else has been making money. So until it matters, I'm not worried. And I'm not worried at all when there's not a recession. And you know what? Look at the yield curve. Here's the 10s minus the 3s. Let me just check my recording software here to make sure you can see the chart. You can see that it's clearly inverted. Let me pull this up maximum. Okay, and let me check just to make sure it's in the window. It's in the window here. You can see that it inverts, then it uninverts, then we have a recession. It inverts, then it uninverts, and we have a recession like clockwork. And we're still super inverted. There's not a recession today. GDP is up. Everyone says that I'm the most angry investor because I think everyone is stupid. And you know what? They might be pretty stupid if they're calling for a recession and they're not in the market and they've missed out the last year and a half of a rally. Because until it inverts, there's no reason to be saying, well, there's a recession, because you know what? GDP is cranking. It's not inverted. Could the data change and could I start freaking out? Of course. And of course, I'm more cautious than I've been in a very, very long time because it's inverted. There were years when it was not inverted, so I didn't even worry. Now let's look at another important piece of data, and that's the money supply. If you look at this chart here, and I'll check to make sure it's in the window, it's in here. You can see that it's up and to the right. The money supply is expanding. Guess what? If the money supply is expanding, assets go up. There's more money. People have more money. They buy more stuff. Everything is good. So there is absolutely no doom and gloom. It is just crazy. It's crazy. And, I wanted to say, do you like that name? Because my girlfriend thinks that I should be called the Angry Investor, because sometimes I'm angry and I think that everyone's stupid, because it seems very obvious to me that I shouldn't be calling for a recession when, yeah, the data might be slowing down, but until it actually says recession, there's no recession. So if you like that name, I'll try to use it. Maybe I'll make some shorts. Maybe I'll become a meme of a person who's like the Angry Investor. We'll see. If you like that, leave me a comment. Let me know. Let's continue on this down here. So let's look at the market, because what is the market telling me? Well, the market is telling me GDP is going. The S&P 500, let's see the chart. The S&P 500, it's in your view screen. It's hitting all-time highs. where's this recession? There is no recession right now, not today. Let's at least wait a week and a half for the job roots report before we worry. Bitcoin consolidating sideways. And you know what? This is typically the time that Bitcoin rips. It halves, it consolidates, and then it goes really high. Will history repeat itself? Well, the next 1 year is going to tell us. So we're going to find out. And gold is ripping higher. I'm glad I have a gold position. I've had a gold position and gold mining position for a long time. I bought a lot of gold miners and I recommended them that I was buying them. I told everyone in my super investor group that I was buying them back here, and I'm way up. And you know what? It looks like gold is going to continue. Of course, it could have a pullback, but if we look at the data from the deficits, they're going to print more money. And as they print more money, historically, gold goes up at like 7% a year over a long period of time. So it's a good inflation hedge against, not necessarily inflation, but just a hedge against currency debasement. So that's an important thing to have as a cash alternative that I use myself. I'm not recommending it because I don't make any recommendations. Now, one last thing I want to point out, Micron blew out the earnings. I have loved semiconductors for the last 6 years now, and that's just because of the trend. Micron is making all the DRAM. It's a U.S. company, and it beat earnings, and it absolutely smashed them. You know what? It was extremely high on the AI sentiment back in July. It was like 3 times more expensive relative to book than it normally is, and it came back down. But you know what? Its earnings crushed it, and it looks like it potentially could at least be consolidating sideways or going up. And I don't expect it to be going down unless we have a recession. I'm not recommending buying it here. I'm just pointing this out as a signal because the most important stock is NVIDIA because it's capitalizing on all the trends, AI, more optimization through AI for big tech. And if you read the data from the big tech, you know what? They're growing earnings. So if they're growing earnings, that's where I want to be. That's where I've been. That's where I'm going to continue to be until the data tells me differently. And it looks to me right now that NVIDIA is solidly consolidating sideways. All the people that love NVIDIA are all about it. And remember, every month we get to look at TSMC's revenue. And they had beat monthly 33% above where they were the year before. That just tells me more AI, more chips. The trend is intact. So I'm investing in the trends. I've been invested in the trends, and I'm looking for the market to tell me when there is an amazing opportunity. This China thing was an amazing opportunity for anyone who was paying attention over the last 3 months. And it was something I was watching very closely, and I almost bought into it. But I didn't because of the China risk, and I'm still just worried because, if I didn't live in the U.S., I would scoop it up, and I would have been scooping it up. I'm not telling you to do that. I'm just saying I would have been because as an American, there's the risk that it could be frozen. And going to zero is a bad thing. But if you're watching this from outside of the U.S., it's something to seriously consider. And if you want to know exactly what I'm investing in, I'm creating a beta test for a program called the Super Investor Pro program. You can look it up on my website. And I've also just put up an email list where I'm giving away for free what I'm calling the number one stock for 2025. You can go to my website, highreturnlowrisk.com. I'll put it in the description. You can click on this big button here and go ahead, sign up to my mailing list, and I'm going to email you a breakdown of my prediction for the number one stock for 2025. You just sign up for there and I'll email it to you. So what do I think happens next with all of this stuff? Well, there's really only 2 possibilities. In a week and a half, 2 weeks, when the employment comes out, well, employment gets worse and then the market tops out and grinds lower because employment keeps getting worse. That's one possibility. Or the other possibility is the fiscal propels the market higher and nothing else matters. Now, that's what's been happening. GDP has accelerated. We're watching it happening. That's my base case. So I'm long. I've been long. I'm cautious about all of this data. Cautious. I can't speak correctly there because I've been rambling for a while now. I'm not sure what's going to happen, but the data right now, as of today, 927 is telling me to be long, and until the data changes, I'm maintaining my long positions. All right, hit that like button, leave me a comment, tell me what you're watching, subscribe to this channel, share this with someone who would get a lot out of it, and I'll see you next week. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.